With me this morning, Melissa Leong. Great to have you on the program, Melissa, money expert, the author of the finance guide, Happy Go Money. She's in Ajax, Ontario. Melissa, our viewers have questions for you, all sorts of them. So are you set? And here we are ready to go as we anticipate this big interest rate increase today. Many of the questions have to do with mortgages, so why don't we start right there, Melissa? Wondering, for example, from Karen in Calgary, who has a mortgage, prime minus 1%. That's what she's paying right now. With mortgage renewing coming for her in July, should she lock in today if she can? Where are you standing on variable versus fixed?
Oh, that's the age-old question. People always ask that question. And so historically, variable rates, adjustable rate mortgages have been cheaper. So they will save you more money, but it doesn't necessarily mean that it is the best. Personal finance is personal, so you have to look at what works best for your household. You might run the numbers and actually realize that it is the best option for you in terms of saving money. But it's not always about saving money. It's about sleeping at night, right, Heather? So if you are going to be stressed out about the idea that in the next 6 announcements coming in 2022 that rising interest rates will affect your monthly payments, especially if you're someone who's living closer to the margins, living paycheck to paycheck, that regular payment is important to you, then you might want to lock in. Also, if you are shopping, house shopping, you might also want to see if you can get, a rate where you will lock that in for a period of time while you are shopping, so that you know at least while you are shopping that you have an idea of what you will be paying. Okay, that pre-approved mortgage, try to hold up onto that as you look around. That's right.
We'll see what the impact is on housing. So want to thank that question from Calgary. Thanks as well to Fran sending in questions wondering about the impact on mortgages. We're getting a lot of questions from seniors, Melissa. It's interesting because you mentioned people on fixed income. A lot of very concerned seniors who are wondering if they're in fact being sacrificed again in this increased continuum, because how it's going to make it harder for them to pay for everything as costs are going up and their incomes are stuck. So I'm wondering maybe an answer specifically for seniors, but we did get a question from Mike and Judy in Kitchener, who are retired, and 70% of their investments are in safe investments, but this is what they write to us this morning. When interest rates rise, their bonds start taking a nosedive and we lose money. So why does this affect their safe investments so negatively?
There is a lot of market volatility right now. You know, geopolitical situations are causing a lot of turmoil in financial markets. So you're going to see in the short term some instability when it comes to your investments. However, when interest rates rise, some of your fixed money-making vehicles do actually balance out some of the instability. So you actually see a rise in some of things like GICs. And so that is some good news. It's not, in the interim, it's not going to rush in and fix all the problems, but hopefully, fingers crossed, we will see some interest rates, some rates rising in fixed income vehicles like GICs.
Rowan wrote specifically with that question, will this have an effect on my GICs? So good to know. Rowan will be happy to know, although I guess it's too soon to say if we know when, but that was definitely a question. But maybe coming back to the seniors who are very concerned about the costs, their cost of living going up. All of our costs of living are going up, but with that fixed income and no room to move, it's a big concern. What are you suggesting to people right now in terms of making the most, stretching the dollar to the maximum they can right now?
I completely understand. I think every one of us have been feeling the pressure of rising costs either at the gas pump or the grocery store. And there are only so many things that you can do in this moment, but they are within your control. One of the very first things that I would do is just to take stock of your situation. And so in March, I got an email from my mortgage lender saying, hey, you know, your adjustable rate mortgage is going to go up But I was ready for it because last year I sat down with my husband and we looked at what our budget would look like with a 1 to 2% increase in our borrowing rates. This is something to stress test your own household budget. Also to look at the inflow and outflow of your money. It's easier with someone with a fixed income rather than if you're a freelancer, but you're going to look over the last 3 months at your bank statements, look at how much money has come in and look exactly where your expenses have gone. If you categorize them, I promise sometimes it's like looking at a dark house and thinking, I don't want to look in there. It's scary. But when you turn the lights on, it's not as bad as you think. Then you can go line by line and see where you can cut back, where you can call your service providers and negotiate for lower prices, where you can have a little bit more wiggle room to pay down debt, because we all underestimate how much debt stresses us out. And with rising interest rates in this environment, it is, I promise you, a good money move to try to pay down your debts.
Okay, I have more viewer questions, but I did want to ask you about that. It's interesting, during the pandemic, those who have had income streams, very thankfully, in some cases we've heard, have been able to actually save money during the time of the pandemic. So if people do happen to have cash on hand, would you suggest that with the interest rates going out? Is this the time to hammer down that debt?
You made an excellent point. I mean, we're all in the same storm, but we're all in different boats. So you're going to have some people who have some extra disposable income because they just didn't have things to spend on during the pandemic. And so there are always two things that I like to stress if you have extra money. One of them is making sure that you have a healthy amount of emergency savings, stash of cash in an accessible place, at least maybe 3 months worth, because you never know what's going on and never know what's going to happen around the corner, as we've learned with the pandemic. And when you run into a situation, you don't want to have to go further into debt or borrow. However, if you do have high interest credit card debt, for example, that's an excellent place to put extra money. You are bleeding that 18, 19, 20% every month in interest if you are carrying a balance. And so putting money to high interest credit card debt, you're never going to go wrong in that sense.
Okay. Back to viewer questions. This was interesting. A number of questions from savers, obviously, in our viewing audience, Melissa. Brent, for example, Mona Lisa in Waterloo. Also a question from Gerald, wondering whether now with the overnight lending rate, the interest rate going up, will also banks begin to offer higher interest rates on savings accounts? If so, and when? What do you think is the likelihood of that?
I wish I had a crystal ball. I wish I had a crystal ball in this sense, because I often think that I think we all look at our savings accounts and things, even with high interest savings account, we think, what, I wish I was getting a little bit more here in this place. And so this is something that we can hope to look forward to. I don't know when. However, you can we can look historically at what has happened in the past. And typically with higher interest rates, this was a very long time ago. We've been in a low interest rate environment for a very long time. You have seen a little bit more in terms of savings in that sense. However, it is important, sometimes we think, I don't want to have all this money sitting in savings doing nothing. It's important that that money has a purpose. So if that money is sitting in savings, in a high interest savings account, and if you look on websites that actually go through and they will list different savings accounts across Canada with different institutions with different rates of return. So you can actually shop around, look and see where the best place for your money is. And that money, the purpose that's there, may be for short-term spending. You're going to spend on your daughter's, wedding this summer. You're going to go on vacation. You're going to save for emergencies. That's where the money is. For the rest of the money, sometimes we have this impetus, this feeling of, I'm going to flee the market. It's scary. But for long-term goals, you want to make sure that you are investing in places like the stock market. You can diversify that risk by putting in, funds and that sort of sense. But that is where you're going to get the return for long-term goals like retirement, like your kids' education fund.
Okay, one more question. It's sort of a combo, and again, it comes back to housing. Anne-Marie was saying she hopes that the Bank of Canada's moves do indeed have the intended effect, so she can actually get into the housing market and go back to retire and buy a decent house in Halifax is her goal. So that's part of the aim of all of this, and we'll see the effect. We've already seen the market cooled somewhat after the first increase rate of just 0.25% increase. But this is an overall statement that I'd like to read to you, and it's Aldous in Kitchener, because it sort of speaks to Canadians, I think, view of the severity of the situation. We bought our home and thought we could handle some rate increases, but didn't realize it would be this much a month. And it goes on to say, it wouldn't have been so bad if the price of our commute and groceries, etc., hadn't also gone straight up. So unfortunately, our monthly cash flow will be much tighter now, though thankfully we'll be able to stay in our house. I worry about others who have had to borrow even larger amounts. Again, it comes back to this situation. Inflation is everything. We're paying more for everything and now paying more to borrow. Just maybe if you could have a final statement on what Aldous is speaking to and what you're seeing and hearing out there as people talk about really the current climate for what they do with their money right now.
I have so much empathy for Canadians who are stretched thin. You know, we were living in an environment where we were allocating all of our dollars to certain things before inflation hit us. Even before the pandemic, we were running into some money challenges with trying to take care of all of our needs and all of our priorities. You know, you want to save for your family. You want to enjoy your life. You want to do all those things. So I hear you, and it is tough. But anytime that you need to look at your money situation and set new goals, short-term, mid-term, long-term goals, it is not always forever. You can think about it as, you know, I'm going to set this goal. I'm going to set it for a period of time. I'm going to get more peer support. All of us need more of each other these days anyway. So if you can just get a group of friends, some family together, maybe on your phone or on a WhatsApp group, and set some money goals and talk about every Sunday, we're going to check in and see how each other is doing. We're going to talk about money. We're going to talk about whatever goals. You don't have to tell people how much money you make, but if you have a certain money goal for the end of the month, end of the week, either cutting this amount or maybe thinking about making some big sacrifices in service of your future. If you have things that you want to save for that are important to you that you need to maybe sacrifice, I have friends who've gone down from 2 vehicles to 1 vehicle. I have some friends thinking about having a renter perhaps, or converting their home so that they can have people stay in the basement, for example, to make some extra money. There are always ways. It does require some innovation and some sacrifice, but together we will get through it.
Melissa, thank you for joining us and fielding all of these questions. I want to thank everyone who sent a question in as well, because they've been very interesting, wide-ranging, and obviously reflecting a level of concern. But Melissa Leong joining us from Ajax, the author of Happy Go Money, thank you very much.